Dear amazing trader, welcome back to the segment of this channel. And in this today's video, we're going to be talking about one thing you need to do to become a profitable forex trader, or that one thing that you need to do that is going to give you the edge over the market. All right, it's just one thing you need to do, and that's we're going to be going straight to the chart, and I'm going to be showing you that one thing you need to do to become a profitable trader. And then one thing is you identifying the direction of the market. Now, when I say direction of the market, I'm not saying direction of the market for the day. I mean the direction of the market for that period of a time. That time, you need to identify the direction. Okay, for this social time, what direction is this market moving? That once you can identify that on the chart, then trust me, you already on the journey to be a profitable forex trader. All right. So in case you just come to my channel for the first time, my name is Joseph FX. You want to smash that subscribe button, drop a like, and don't forget to click on the notification bell so you don't stay updated when I drop awesome content like this. Without further ado, without wasting much of your time, we're going to be driving straight into the video, and I'm going to be breaking down the charts for you to identify the direction of the market. All right. So no, you need to stop listening to all those things out there. You need to do this from do this. That one thing you need to do is just identifying the direction of the market. And you can only identify the direction of the market if you are learn the basics. All right. First, you need to learn the basics. In case you've not learned, what is chart pattern, depending on the strategy you are using, how to identify a candle, different candles, and stuff like that. So you need to learn that. But once you learn those learning and you're not profitable yet, then this video is for you. Yes, you've learned those basics and you're not profitable yet. This video is for you. It's just that you don't know how to identify the direction of the market, and that is what I'm going to be explaining in this video. The details, I'm going to be breaking it down. All right, identifying direction of the market. When you identify the direction of the market, is you identifying the trend of the market, being a top trend or being a downtrend, or when the market is in consolidation. You just need to identify. You need to train yourself to be able to spot that. Oh, now the market is in consolidation. Now the market is in an uptrend. Now the market is in the downtrend, and that's all you need. Once you can identify that, then you already a profitable trader. It's just for you to give it time and let the market make you the profit. All right. So without wasting a lot of time, let's dive into the video. Let's go. Have AUDJPY, and that's what I'm going to be explaining on how you can identify the direction of the market. All right. So I'm not going to be explaining with the rough chart. I'm going to be explaining with the live chart so you can understand what I mean. All right. At first, let me show you the setup. This is AUDJPY, and this is the sell trade. I just dropped the signal in my trading community now, so you can check it. You can check it. So this is a trade you don't want to, you know. So in front of me is AUDJPY. As you can see on this pair now, I'm currently shorting this sell, and I was able to share that because I can identify the direction of the market, which is what I want to about to explain to you in details. All right. So first thing first, this is the chart. All right. So if you look at this chart, we clearly see that we're in an uptrend. Right. Looking at this chart, we see that we're in an uptrend. Price creating low, high, low, high, low, high, and continues going like that. Then price get to this point. All right. At this point, when price was around this region here, then it was coming down here. I was watching it at, is it going to break this previous level or is it going to continue going up? All right. So I was just watching it closely, and that is why you need a higher time frame. So then that was when I moved higher to my weekly time frame. Once I started seeing charts not being clear on lower time frame, I go straight to the higher time frame to identify what is happening. So how did I, when price gets to this point, I was watching it, and once the lower time frame is now getting confused, all I do is what I go to the higher time frame to get a clearer picture. So the higher time frame is like the Google Maps, all right? Gives you direction like, okay, this is the fastest route, this is the shortest route, just follow inside. So that was what I did. I went straight to the Google Map, and the higher time frame I went to was a weekly time frame. Sometimes I go to monthly or weekly. So the two of them, they are just something like the same thing to me. But if it's not clear enough on the weekly, that's when I go to the monthly. But most time I just like being on the weekly and monthly. So I went straight to the weekly time frame. Then when I get to the weekly time frame, so all I did was I makes my chart very small, very straight. Then I looked in the past and I looked this place like why does price does not respect this my black line here? Why is it coming to do up? Then I notice at this point there's a level at this point which I dropped another black line there. I dropped it here. So I noticed at this point there was a level there. You can see this is this, touch it here. So you can see here you didn't touch it. So if I have to go, you see a lot of time price respected it. So you can see it here. And I said, okay, this is a valid level. Then all I did was I came back to the present market situation. Then I came back down to the daily time frame to check, okay, how what are the patterns I can see on daily time frame that makes price to react previously from that zone. Then here coming here in this pass, I see an head and shoulder pattern in this area. So let me just show you. So this is what I'm talking about. This is the left shoulder, the head, and the right shoulder. I see this head and shoulder pattern. I was like, okay, this is a strong level I can hold on to. Then I've gotten the information I need on both weekly and daily time frame. That was when I need to come back to the time frame where I can be considering taking an entry, which is the 4 hours time frame. So coming to the 4 hours time frame here, I pull out like this. So the level was like this. So I need to do it. I saw this candle rejecting at that time. Then I just put it at the wicks of this candle like this. That okay, let me see what is going to happen on this candle. Then this at the end of 4 hours, we have this candle closing as um a what this candle chapter pattern called? Excuse me, I think I skipped the name. Oh, sorry. So I saw this candlestick for me, which is the shooting star, which means price is going down, which means seller wants to take control. But I was not comfortable enough to take this trade because there was, if I'm to enter here, my stop loss needs to come above here. So this kind of setups, and you can see that the buyers are very strong, even getting to this point. So it's only this one out of all this all can do. So I was like, I need to wait and observe. So then price started consolidating, came here again. Then I have this massive red drop. The massive red drop, like, okay, I think the price is gone already because I don't want to take this kind of trade get here. My stop loss is going to be very big. So like, okay, that was when I pulled out this my yellow bar here, put it that okay, I would like price at least coming back to half of this candle. This is one thing I used to explain to my student I've mentored. I said when you see a massive candle like this, just mark that massive candle at the center. Just calculate it from the wicks to the wicks, the middle. Just put it. If price can come down to the middle, that's 50% retracement for that candle alone. So it's Fibonacci 50 for that candle alone. I said then you can take your entry, whether being a buy or a sell. I used to tell my students this. So I waited for this candle and I waited for the pullback. Then I at the middle, this was the middle where I dropped this yellow line. Price came back there. But at the time price came back here, I wasn't on the chart. So and I personally I don't use pending order. So I'm not a pending order strategy user. So I couldn't get in this trade. And only to come back, I see price has dropped. And this will have been my first level target. I was like, fine. Then I tell myself, I will only be interested in taking this trade until I see price coming below this black zone here, which is this breaking this support, becoming resistance. That was where I'll be interested in taking this trade on ADJPY again. So I never took any trade. The price was just doing this. I was just watching it. All right. Came to this support again, tested it, came down, tested it, came down, tested it, then started dropping off here. So in my community, someone was asking, is there any view on ADJPY? And I tell them, expect more shorts. All right, but I'm not getting it now, but expect more shorts. Then today, while I was recording a particular video, I came to this pair to use it as an example. Then I saw the setup. So this candle just closed at the time. So you could see this candlestick is about closing at the time. So it has already closed. Actually, a new one is about forming, but it's still in line with the wicks of this one. So I have to use it as my entry, and I put just stop loss above that candle, which is giving me a stop loss of 35 pips. And on this trade, I'm going for a risk reward of 1 to 3, which I'm going for 105 pips. Alright, 35 pips, 105 pips. So it's giving me a risk reward of 1 to 3 on this trade. So you can see risk ratio 1 3. And I dropped this setup in my community. If it's not this one I dropped, then it is card GPY I dropped because they are similar. So I took a trade on this. I also took a trade on card GPY because the two of them is the same thing. All right. So and you can see how the trade is playing out. So identify direction of the market. So how to identify the direction of the market? I went straight to the weekly time frame to see which level is holding over there. So one of the way you can identify the direction of the market for a month, for a week, for a day, and for that period of time, is you going on the higher time frame. The higher time frame are very very strong. All right, so you can see even if I'm to take a trade on this my little support here. All right, because this is 4 hours on this little support, I would have taken the entry, but I was trading gold. Gold was making money. I just got out of my gold trade yesterday, so and I saw this today and I took it. So that was why I was not even interested in taking trade on this pair. So let's say you are not this kind of strategy that I like trading on the 4 hours, 1 hour. This time frame are too big. You like 15 minutes. Most of these trade, people like 15 minutes. This is what you're going to do. All right. So once you come to this area, identify it on the weekly. Put draw something like this, like a support zone there. Draw it there. If you're pending other strategy user, just put your pending order and put your stop loss above it. Then you are going to take the sell down. So identify direction of the market is. I saw this now. If you are still looking at this trend, all right, from even from here all to this point, even to this present state, it's still so much looking like an uptrend. But for heavy, massive move, there must surely be a pullback. So I might just be trading the pullback. But I was able to identify the reversal. I was able to identify that pullback. That is the message I'm trying to pass in this video. All right. Now, if you look at my target here, where I'm targeting is actually 50% of this one to this high here, 50% treatment of it, and that is me using the Fibonacci tools. So one of the tools that also help you to identify direction of the market is the Fibonacci tools. You need to learn how to use the Fibonacci, how to trade. So let me show you an example. So this is Fibonacci. I draw from this low here. I'll pick my Fibonacci tools like this. Then I'll take it from this low here all the way to this high that is there. Then I stretch it out so you can see. So see where I'm setting to. So if you have noticed my trade, if I want to buy, I love taking buy in between 50 and 6.18, which is where I'm selling to. So because I know this price might just come here, do the retracement, then start going over. I just dropped the signal not up to 10 minutes ago or so, and we are almost close to 1 to 1 on this trade already. And you can see the candles are very very heavy, dropping heavily. All right, so let's say you have a profit challenge. How is it going to be hard to fight from the challenge? Just risk 1% of this trade, you make 3%, then wait for other days, look for several setups. So let me just go to the card GPY. So let me just show you the trade on the card GPY. You also see that it's the same thing. So you can see this is the card GPY chart as well. So it was a retracement, this one here, and that's the entry. But this one is kind of slower than that of ADGPY. I can see ADGPY is already in profit very well, but this one just in a little bit of a profit. All right. So and this also a huge word of 1 to 3, same as the AUDJPY. So it's just you identifying the direction of the market. So as I was explaining, you can see that they are similar pattern. All right, you can see how this one also went up, testing it. Then I put this backline here that it needs to break this backline. Now this backline was taken out. I think this is 1 hour time. This is 4 hours time frame. This will be yesterday, but I wasn't even checking this chart yesterday. I was taking my entry from here, and I'll be on this trade up to this point because this is where I like taking my entry. But here I still take it, it's still fine because this is just a little pullback. All right. Now, also I have on this channel, if you watch the videos on the channel, I've explained the particular strategy you can use to identify the direction of the market. All right. I'm also going to be explaining a little bit of that strategy in this video, which will also help you to identify the direction of the market. All right. And that's the moving average. That's why you see I have it here. I don't used to use it. It's only when I want to explain a video like this I have to turn off the moving average. There's no setup I was saying you see moving average. I don't usually use it, but this moving average is very powerful. You need to go and watch that strategy where I talk about how to trade using the moving average. All right, so how to trade using this moving average? It's just two moving average. If you know how to trade it, even if you don't know how to analyze the chart, just the way as I'm analyzing it, that moving average alone will help you. All right, so let me put it on. So let me show you what I'm saying. So you can see I have the slow and the fast moving average, which is the red and the blue. All right, so that's a the exponential moving average EMA with the period of 23, which that is the period of 23 is the one with the red, I think so, yes. Then the period of 10 is the one with the blue. So the period of 10 is the one with the blue, yeah. And this is two moving average I combine together that also help you stay as a profitable forex trader. So now let me explain how you can actually can watch the video of this moving average, because I'm not going to be explaining too much of it here, but I'll just do a brief topic on it here. So you can see here, let's say on this pair you are confused, you don't even know what to do. Look at this. The moving average came here, crossed for a sell. That was after the close of this candle, crossed for a sell. If you actually took this sell, it means your stop loss have to come below above here, right? And let's say, for example, this moving average confirmed a sell to you, and you took the sell and just went to one, hit you out, you hit the stop loss. That's fine. The moving average came here again, gets to the point, cross for a sell again. At the close of this candle, you enter again. You should put your stop loss above this moving average again. All right, and you enter this trade here. So let me explain. You enter at the close here, which is this point. Let me pick my selling tools, which was the cross. This is cross. Your stop loss above there. Then you're targeting. Okay, you know that there was a level here, so maybe to this previous consolidation here, you target. This is giving you a risk reward of 1 to 2.12. So actually, you lost one here. You are making two back here. All right. That means you are still plus with one. Plus this ETP, you plus with one. So, but let me explain what I'm trying to explain there for you. If you check this moving average very well here, how do you know one of the way to use moving average accurately? I'm still going to do another video explain the moving average more. You see that moving average, so this is like a double top, one top here, two top here. So moving average giving you a double top. And if you check chart pattern here, this is one top, this is two top. So double top on the moving average, double top in your normal chart pattern. That is double confirmation for you. So immediately you saw this, boy, this is the double top, and this thing cross. You can even risk higher. Let's say on a normal risk ratio is you're risking 1% of your account. You can double it only to 2% of your account, because you have double confirmation here. One top here, two top here. One top, which is two top. Moving average, one top, this is two top. That's double confirmation. Now, if you're not someone like me that can identify its resistance level, you see that this also happened on a support level, which is now becoming resistance. All right, one top, two top. That's three confirmations going. Three things are telling you to sell, bro. Why still waiting? Now, the fourth one here, which is the trend line, I joined this one with this one, then I drag it down. Then price came for the third touch here, all right. Then I have this massive drop off. So if I'm to use this particular candle to trade, my entry will be here and my stop loss will be here. My entry will be here, my stop loss will be here. And you can see even when price retraced, it didn't get to that stop loss. So let me show you what I'm saying here. Entry here, stop loss above it here. So just you have to put your stop loss like 5 to 10 pips above the previous high. That's the way I put my stop loss. And you can see I put the stop loss. It was like say price was able about tapping the stop loss, but that didn't happen. Then came back to entry. And if you see the entry was exactly where the moving average crossed for the second time here. Here is telling you, yes, your trade is holding. And do you know what I'm going to be doing in this kind of scenario? I'm going to be adding up. That means if I was fixing one here, at the time it came back to my entry here, I'm going to add another one, making it two. Now I'm going to be having two trades open on that particular pair. I'm going to hold it down till I have, once I see a double top like this, what I used to do is from this zone, this was where we had the consolidation to this point. So I'm going to mark out, which is the same thing with the double top. I'm going to mark out to the last lows here. Then I'm going to take it down, go for the extension. And you can see price is about getting to the extension already. So which is going to be here. That means if I'm on this trade, I'm going for a risk reward of 1 to 4. And 1 to 4 in 2 places make me, I'm mixing 1 year, I'm mixing 1 year, that's 2. So that's 2 times 4, that's 8. I'll be making 8% of the account. This just singular trade is enough to pass phase 1 of the profit account. So you see what I'm trying to explain here. That's using 1 pair. No, you identify the direction. You were right to the direction here, but price was trying to manipulate here. But still it out, then came back. You don't change your bias because this thing is trading against you. Just say, it's buying. No, no, no. You stick with that bias. It's either it eats your stop loss or you take profits. All right. It's either you let it eat your stop loss or you take profit. And you can see it came back here and tapped in. So that's for that one. Now let me explain the details. Now looking for this entry I took here. If you look at it here, I didn't own the Fibonacci when I wanted to take this entry. All right. But looking at this Fibonacci now, let me just zoom it out. You see that this was a retracement and a touch on the Fibonacci. It touched this, Fibonacci, sorry, the moving average. It came and touched the moving average, then rejected, creating the shooting star candle. And shooting star was confirmed to use sell. That was why you see I had this sell here. And you can see it was close of the candle and the sell is going down on the risk to table. So double confirmation, shooting star, candle pattern 1. The moving average touched here 2, and thirdly, I'll tell you also Fibonacci because I'm to use my Fibonacci from this zone to this zone. That should be okay. Let's try it out. You can see that's the touch on the 32% retracement. So 3 things get confirmation for these buyers, but how will you use one thing to get in this trade? Because I can see the other 2 things inside my eyes even without me bringing the tools out. I didn't bring out the moving average tools, but I know for this price to retrace to this space, it's on my touch the moving average. I knew that. I didn't use the Fibonacci tools, but I know this retracement will be a Fibonacci zone. The only thing I saw and that got me interested in taking this trade is what is this shooting star. The drops are massive. The drops are massive. Then see this shallow consolidation, shallow bias. Then this massive red came. It's just a confirmation. I don't need any other confirmation. It's just a confirmation. And I use this one thing to enter the trade, just this candlestick pattern. Then the Fibonacci also moved in line. Moving average also aligned. Alright. So I will be dropping more series of videos on this YouTube channel. If you don't understand the candlestick pattern yet, I'll be dropping a video where I'll be explaining how to use the candlestick pattern to make decisions in trading. The only candlestick pattern you need that works all the time, alright? Like 90% of the time it works. Once you see them, don't even think twice. Praise that buy or praise that sell. So that is CAD JPY. So I just give you an explanation on the trade I took. So let me go back to my ADJPY. Let me check the trade. So it's moving as well. So you can see the moving average also in line with this. I didn't bring it out, but you can see it's in line with this. Then this one was double bias. I have this little support break. Then I have this candlestick confirmation, which was why I get in this trade. Now Fibonacci also is in play, but I didn't even try using it. Then the moving average is also in line. So that is just the end. That's just how. That's all you need to know how to identify the trend. And one bonus tip I'm going to give you is how to identify the trend as a new beginner trader or a trader that is struggling to make profit. Open your chart like this. All right. Open your chart. Make the chart look like this. Look at it for like minimum of 1 minute without you doing anything. Don't place anything. Don't do anything. Just looking at it. Study the movements, how it's going, how it's coming. Study it. All right. Go to the higher time frame. Study the same thing. Write down what you notice. All right. Those things you notice. Now, when you start analyzing the charts, if you see similar things, it's like, oh, I've seen this thing before. Then you start mapping out. It's going to help you become a profitable trader. You become a profitable trader not by you pressing the buy button or the sell button, but you just trying to observe the chart alone, trying to understand what is really happening on the chart. And let's bring it to the end of the video. If you want to come on the subscribe button, drop a like, and don't forget to turn on the notification bell so you don't start to check when I drop something like this. And I see you in my other content video. Peace out.